Megan, we only live one day at a time, and I know calendar, now it's a new year, but we're still, basically, it's a continuation of where we were last week. But just let me ask you, will 2023 be a year of declining inflation? Not deflation, but will inflation slow, and will it be a year where there's a recession, or will we continue to see this very resilient economy and labor inflation will persist throughout the year? What do you think we'll look back on it in December 31st of this year? What will we have seen?
Yeah, thanks. Look, I think peak inflation is behind us in the U.S., barring any kind of black swan event or major lockdowns in China that disrupt global supply chains and push prices up. I think we probably have seen the high water mark for inflation, so inflation should continue to decelerate over the course of this year. Will it get to the Fed's target of around 2% by the end of the year? Almost certainly not. And the biggest reason for that is that, the driver of inflation in the U.S. now is services, and the largest component of that is wages, and wages are pretty sticky. It's easy to boost them. It's really hard to cut them. So I think inflation will be somewhere around 4% by the end of this year. So closer to the Fed's target, certainly from where it is now, but still not there. I think growth will also decelerate. In fact, I think we will go into recession. It's just going to take longer than everybody seems to think, in large part because there's a massive cash cushion among consumers and corporates in the U.S. And so we'll have to burn through that cash cushion before consumers in particular really start retrenching, also corporates. And so I think we'll see a recession in the second half of next year. The Fed has been really clear about their policy path. We just got their latest dot plot and economic projections in December. And yet the markets have been really relentless in looking at that and saying, yeah, we don't buy it. So in December, when the FOMC happened, the markets pushed out their rate cuts from May of next year to now August of next year, while the Fed's been saying we're actually going to get rates up at, to 5 or above 5%, and we're going to hold them there for the whole year. So I think the Fed is pointing out that there's just no Fed put left. The Fed's not going to cut just because there's been a fall in equity markets. It would require real dislocations in credit markets for the Fed to step in. That would be the Fed's job. So I think, insofar as credit exists, there is a Fed put. Otherwise, not really. And so I think the markets continue to misprice what the Fed is going to do. Is
that the Fed's fault? Should we say the Fed doesn't have credibility, or is it market players' fault because they just love the notion of higher asset prices, whether it's equities or bonds or whatever? They always want the pivot to come, whether it's coming or not. So it might not be the Fed's fault. It might just be market players are just stubbornly long or want to be long.
Yeah, I think that's a huge piece of it, that investors just really want a Fed pivot, so they're going to continue to price it in. And if you look at the history of the Fed and other central banks, sometimes they are led by the markets. Sometimes they are pushed into it because that's what the markets are demanding. But that's why I highlighted the notion that this Fed put just doesn't exist anymore. I don't think the Fed is going to be pushed into rate cuts unless there are real problems in credit markets. And we could get problems in credit markets, right? A third of our corporate debt is BBB rated. If that all gets downgraded to junk, then there's going to be a lot of forced bond selling. Maybe the Fed would have to step in. It would have trouble doing so because the Fed's not going to buy up junk debt. So that is a real concern. But my forecast for a recession later this year is for a short and shallow recession, not a financial crisis on top of it. And in that case, I don't think that the Fed's going to step in and ease. I think it's going to take longer than the markets are pricing.